Palantir stock, an extremely controversial stock, especially here on YouTube. And I have definitely been someone that's been vocal on this stock. You've been following my channel for a little while. Not really been a huge fan of the valuation of the business. Although I always love the actual company itself, it just never compelled me enough to open a position in the stock. But the stock has gone through a roller coaster. Sentiment has changed with the stock price changing. And now it may be time for me to finally enter Palantir stock. And in this video, I'm going to outline some fundamental reasons as to what got me interested, why I'm all of a sudden so interested in this stock, and just kind of give you my reasoning as to why I'm considering this as a new addition to my portfolio. Now, from its peak earlier this year, the stock has corrected over 50%, and it's sitting once again in the teens at the time of this recording. That is a drastic re-rating that the stock has seen. And to be honest, I think it was much needed for the stock, because when we come down to more reasonable valuations, things look better for the long-term health of the stock. And as long as the business can keep executing, that stock should see multi-bagger returns over time. So I don't want to waste your time, guys. Just hit the like button if you enjoyed the insight in this video. But now let's kind of start with some data. But first, let me just kind of share with you my investment thinking when it comes to businesses like Palantir. So when it comes to SaaS type companies, which is what Palantir is, software as a service, I have a few conditions that I look for, and if those conditions are met, or I believe the company will meet that in the near term, I will most likely initiate a position. I want to see strong revenue growth year over year, especially in the cloud segments. I want to see positive free cash flow, and I want to see that growing healthy year over year. I want to see strong net retention rates. 100% is a bare minimum and honestly would not impress me too much. I want to see things like, 120, 130, 140% plus. That is some impressive retention. And of course, I want to see a business that has a very strong moat to it, a leader in its space, a company that is just so far ahead of its competition that it can just keep executing the way it is today and just keep widening the gap. And I've invested in many businesses like this over the years. They've rewarded me handsomely, and the ones that have kind of fallen behind, their stock price has reflected that. And of course, the last thing, guys, a no-brainer is the valuation of the stock, right? Like, the business fundamentals can be extremely strong, but if the stock itself is too expensive, I'm not going to initiate a position. I'm going to wait on my hands. I'm just going to wait for an opportunity. And for SaaS businesses, I believe price to sales is a very fair metric to look at. For me personally, what I found is, under a 10 price to sales is a very healthy price to sales, especially for a fast growing business. I would consider something in the teens if it is extremely high growth, talking 30, 40, 50% plus. But anything more than that, it kind of makes me question if it's too expensive, and I have to look at a lot of other metrics to kind of draw a conclusion. So that's kind of what I'm looking for high level. We're going to go through all of that with Palantir stock right now with some data. So first, top line revenue, and this is growing very well in the mid 30% year over year, with the commercial part of their business, which I'm optimistic on, accelerating their growth year over year. Now, looking out to next year, revenue growth, according to analysts, is expected to slow down to around 30% or so, versus this year, which is going to be close to 40% or so. And taken directly from Palantir themselves, this company expects this 30% growth to continue for the next 4 years as well. So yes, we are going to see a slowdown from this year to next year, but then things should level off. And to be honest, 30% for the next, say, 4 to 5 years is a commitment from this company, and I think that's a very bold commitment, and I applaud them for being optimistic here, and so far they have executed. So I'm saying that because there's no reason for me to doubt the management team right now. If they say 30% over the next 4 years, I'm going to buy that, and I'm going to factor that into my valuation. Now, if they fail to deliver on this, say next year or the year after, that'll definitely damper my view on management, and I'll reevaluate the position at the time. But as of right now, we'll give them the benefit of the doubt. Now, next up is free cash flow, which is positive $119 million. And it's a huge improvement year over year, where they were actually negative in 2020. And the margins here are healthy at 30%. So this is looking like an incredibly profitable business. And it's possible for Palantir to be one of the most impressive SaaS businesses once it matures. Those type of margins are typically seen when a company is kind of slowing down its growth, it's a lot more mature, it has more predictable revenue and customers and all that stuff. But we're seeing this in Palantir already today, even though it's still growing rapidly, which keeps me very optimistic for strong profits in the future. Now, free cash flow is positive, which is again something I want to see. It's about $320 million year to date, and they are raising their guidance for full year to $400 million, which shows a lot of strength in the underlying business. If free cash flow continues to grow at this rate that it did from 2020 to 2021, we could see $1 billion plus in free cash flow in the not too distant future. And FYI, $1 billion of free cash flow is incredible, and some of the largest, most successful SaaS companies see their free cash flow in, the couple of billions or a few $billion. So Palantir would enter that sort of status when it comes to an investment. Now, also on top of this net retention rate, Palantir does have around 130%, meaning that customers spend 30% more every single year with Palantir. So even if they don't acquire new customers, they will still keep growing 30% plus, which is why they're so confident on that 30% plus revenue growth for the next 4 years. But when it comes to net retention, I couldn't explicitly find this from Palantir directly. I had to look at other sources, and that's kind of the number I came up with. So if you guys do know directly from Palantir what the net retention rate is, and they've stated that on a conference call or some investor presentation or something, please let me know in the comments down below. But as of right now, I'm going to use that metric because it seems to be in line with what I'm seeing with other numbers from the business. So far, revenues, check. Free cash flow, check. Net retention, check. Everything looks extremely strong. So now let's kind of move on and talk about price to sales, because now we've confirmed the fundamental of the business is strong. It's a company I like. But does the valuation at today's stock price make sense to buy? I'll tell you this right now, when it was at $40, even at $30, it did not make sense. But now that it's in the teens, maybe it will. So now if we look at the current price to sales for Palantir, which is sort of backwards looking, it is trading at a 25x, and it's only ever been in the teens when it first hit public markets last year. Now I want something that's, under a 10, in the teens, worst case scenario. And here for Palantir at 25, as a current price to sales, I'm kind of torn. I'm not really sure if it's worth it at this price. But you know what, I figured let's do something a little bit unique here with Palantir, because it's such a strong free cash flow business and such a strong growing business that it deserves a little bit more analysis. So what I thought I'd do is that compared to some of the fastest growing SaaS companies out there in the stock market that trade at, supposedly more expensive multiples, and we'll compare the forward price of sales for Palantir versus all of these other companies. We'll look at some other metrics as well to determine, okay, where does Palantir really fit with this high growth SaaS sector that we're looking at. Now remember, we're looking at forward price of sales this time, which I think is a much better metric to use because we're investing for the future, we're not investing for the past. So that'll kind of be the number you see on your screen here coming up. So here are the names, some quality companies that you probably would recognize. And they're all SaaS-based businesses. They all have strong recurring revenue. And we can see when compared, Palantir is actually the cheapest on a forward price to sales basis, actually dipping into the teens here just barely, but that does excite me. Now on the flip side, guys, we have to note this Palantir does have the slowest growth amongst all of these players, so that may be why it's trading at the cheapest forward price to sales. But unlike others, Palantir is very profitable. They have strong free cash flow that's positive. They have strong net retention, and their margins are unmatched. You can see how vastly better they are compared to these other peers. So I think that Palantir should trade at a higher premium than these other companies, even though they are growing slightly slower than them, because they are a much better money-making machine. So now after looking at this comparison, I'm a lot more at ease with Palantir's current valuation, and I would venture to say that it actually is looking attractive right now. I won't go as far as to say Palantir is dirt cheap today. Maybe if the stock drops in like the mid-teens or the low teens, then yeah, in that case, it probably would be pretty dirt cheap. But here, with the stock price at like $18, $19 per share, it's starting to compel me to open up a position. And guys, that's exactly what I might do. So just to keep it fair, just to, not front run you guys or make you guys feel like I'm screwing you over in any way. I'm not going to open up position in Palantir today. That's when I'm recording this video, when this video is going to be released. And the earliest that I could initiate a position, if I choose to do so, will be tomorrow, which would be December 8th. Now, I may or may not open one then. I may wait for another few weeks. Who knows? I'm pretty close to deciding, yes, this is a stock that I want to own. But just to keep it fair, like I said, as of recording, I don't own Palantir stock. One thing I may do to actually take possession of the stock is sell some put options. That way I'm able to lower my cost basis a little bit more and get a more attractive price if the stock does fall. And with the stock price being like under $20 per share, it doesn't take up too much capital to buy a few hundred shares here of Palantir. So we'll see. That may be a route I go. I'll maybe look at next week's expiries, something like that. But if you guys are interested, I could make a video on how you could use selling, put options to actually take advantage of lower cost bases for stocks like Palantir. But I'm getting off tangent here. Let me know in the comments if that's something you want to see. But anyways, guys, Palantir is looking like a very strong business. I like the fundamentals. I love the fundamentals, and I really do like the current price of the stock based on everything that we've seen. So this could very well be the next stock added to my portfolio. Anyways, guys, hope you enjoyed this video. If you did, hit the like button, subscribe, hit the bell notification as well so you don't miss any new videos. But thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.